Just a minute after 2, it's a very good afternoon this cold Tuesday here in Bobane. My name is Fiso Malo. Happy to have you join us on the program today to delve into what the market is looking like today when it comes to the business world. And in that very same breath, we delve into Eswatini's economic pulse today with the fresh data that is revealing a robust upward trajectory in the GDP growth, poised to exceed the historically steady 2% and aiming toward a projected 4% for the year 2024. It is fueled by a renewed focus on industrialization, as well as bolstered by strategic investments, especially in the energy sector, which alone just saw a significant 2.5 billion emalangeni in the latest quarter. Really interesting numbers we are seeing here, right in line with what is pronounced on the government policy statement, which was delivered by His Excellency Russell Miso Dlamini, our Prime Minister. Sanele Sibia is going to join us today. He's our economist. He's going to help us unpack these dynamics. We want to explore what, first and foremost, sustained economic momentum and what that could mean for job creation. We know that the Kingdom of Eswatini is on an urgent as well as significant drive to create employment opportunities. We also want to look at what it could mean for business resilience. As we speak about, businesses being sustainable and being resilient in our kingdom, we've seen a lot of small businesses die prematurely. We've seen some large businesses die, and we've seen some others struggle. What does this mean for business resilience? But we also want to tap into, what Eswatini's positioning in regional markets stance is currently. You want to stay tuned for this one as we bring you clarity to the numbers that matter the most to our economic outlook. My name is Fiso Ngumalo. Very good afternoon once again. Let's start the show by looking at our business news today. Okay, making the lead in our business news today, a 9-member board for the Financial Services Regulatory Authority has been appointed by the Minister for Finance, Honorable Neil Reichenberg. Now, the board, chaired by Reverend Senzo Hlachwago, will be in office for the next 3 years. Let's take a listen.
The chairperson of the board, Reverend Senzo Hlachwago, who's next to me, and he's already been, and his term is continuing, so it's not necessarily new. We have 2 people whose terms have lapsed and are coming back to act for another term on the FSRA board, and that's Mr. Joel Dlamini and Mr. Tyron Jacobs. They will be continuing. As one will know, also we have got the Governor of the Central Bank, Dr. Philip Nisi, who has been on the board and is continuing on the board, and is here today also just to join us. Then we have new members who are now the new members that we are announcing today to be on the board, and we've got Mrs. Sindile Kanyana. And so she's a new member of the board. We've got Mrs. Portia Dlamini, a new member of the board. We've got Mr. Muzi Dlamini from the Ministry of Finance, also a new member of the board. And we've got Mr. John Henwood, who's also from the legal practice. He's also a new member of the board. And then obviously who's also part of the board is Mr. Namiso Nchalinchali, who's currently the CEO of FSRA. And so this is the entire board at FSRA. We really do, as the minister, I do welcome them. I do really express to them the importance, the criticalness of what they're doing, the importance of the country. Is often Eswatini, when it comes to making investments and putting their money in certain places, they really do need the FSRA to help them and guide them and give them direction on where is a safe place, and so they can feel protected by the FSRA. And because of the troubles that we've had, it is obviously so important and so critical for us to give it special focus and special attention to make sure that we don't have repeat of problems that we have had in the past.
The chairperson of the board, Senzo Hlachwago, highlights some of the issues that will take priority as the board takes office.
Our direction is to, first of all, try and stabilize the turbulences that are currently happening in the space. One of them is the exponent one, and then other auxiliary matters that are coming up within the sector as well. That's the first thing. Secondly, we need to then, as an organization, rework our reputation within the nation in terms of our public relations and our message out to Eswatini, which, while one has been in the office in the year, with the leadership of the CEO, we have begun that journey of the organization, reworking its public perception issues in Eswatini. And of course, it's just then to make sure that all legislation, we are currently in a process where some of our legislation is under review, which is also very, very key in making sure that we are stabilizing the sector that we are regulating. And we are trustful that members of parliament with the Ministry of Finance will be able to assist us with ensuring that the legislation that is due for review is reviewed timelessly. And once that legislation is kind of solidified and passed on, we'll then be able to now work with that framework to then say how are we moving forward within the sector of Eswatini. And then lastly, it's just to make sure that our staff within the authority are working well, good staff welfare, there's productivity within our colleagues in the team, because once our staff is not happy, then it will compromise some of the service delivery.
Dr. Phil Mnisi, the governor of the Central Bank of Eswatini, forms part of the board. We asked if there will be no conflict of interest since the governor plays a supervision role for banks and non-banking institutions, but not a regulatory role for non-banking financial institutions. And this is what he said.
Phil Mnisi is not serving on this board as a governor. The minister has appointed, has honored and asked to be here as a director. And the role of a director is to support governance, is to support strategic direction of the institution, and I will be making contribution just like any other director. I think the benefit of being at the central bank is the ability to be able to see the total value chain or the total picture. And of course, ensuring that the total financial system of the country is stable. And as the provisions of the Financial Institutions Act, it says that the central bank is responsible for the overall financial system of the country. So there is added advantage of the governor being on this institution, because ultimately the responsibility, whilst it sits with the minister, it's also at the hands of the central bank to ensure that there is financial stability. The central bank also has an added mandate of price stability and also contributing to the economic growth of the country.
The Minister for Finance, Honorable Neil Rickenberg, gave a clear mandate to the board to up the game in regulating and supervising all non-banking financial service providers in the country. For Market View, Nelson Dlangamandla, Vuminkosi Nzinesa, Mbabane.
Right, it seems like the vision for this board is clear as glass, and we hope that all the ambitions and aspirations that they have been bestowed upon them will be realized. Let's go for a net break. We'll be back shortly.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m, where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
This is our live interview segment here on Market View. 54.5 million emalangeni has been distributed under the 45 million emalangeni Micro, Small and Medium Enterprises Revolving Fund, established in the year 2021. It was established to help small-scale businesses hit by the COVID-19 pandemic, and startups. Over 3,000 jobs have been created. Now, this is contained in the recent second quarter report by the Ministry of Commerce, Industry and Trade.
The ministry's second quarter report states that 11 projects were recorded in the investment pipeline with a total value of 2.5 billion emalangeni. The ministry says this is reported on a quarterly basis, not in cumulative terms. The energy projects dominated the pipeline, representing 73%, which is 1.619 billion emalangeni of the total. The Eswatini Investment Promotion Authority continues to track the growing interest in the energy sector aligned with the National Strategy for Energy Self-Sufficiency. The Eswatini Energy Regulatory Authority forecast about 9 billion emalangeni in investments for renewable energy projects in 2025, which are expected to generate 198.5 megawatts of power. The ministry has said this quarter the pipeline projects are anticipated to generate 9,241 jobs at full scale. They continue to say the Eswatini Investment Promotion Authority has observed a concerning trend where actual job creation consistently falls short of the projections. This shortfall can be attributed to various factors, including reduced project scopes. Other challenges realizing projects revolve around policy issues such as incentives, amongst others. In the second quarter of the financial year 2024-2025, the Department of Company Registration registered a total of 696 companies, comprising of 681 private companies, 9 public companies, 37 non-profit associations, and 6 foreign offshore entities. The ministry has stated that it continues to bolster the MSME sector with the 45 million micro, small and medium enterprise revolving fund. As of September this year, loans totaling to 54.5 million emalangeni have been disbursed across sectors like distribution, tourism, agriculture, manufacturing, creating 27 new jobs, bringing the total to 3,084. For Market View, Nelson Dlangamandla, Vuminkosi Nzinisa Mbabane.
Right, as we scan Eswatini's economic horizon today, it's clear that the winds are really shifting and the numbers tell a compelling story, one of an economy that is stretching its wings beyond the norm. Now, with the growth projected to break past the 2% ceiling and reach upwards of 4%, Eswatini is setting the stage for a new chapter. But what does this momentum mean in real terms? Is this growth durable? And how does it translate to the everyday experience of Eswatini? Sanele Sbia joins us virtually to help us decode these economic turning points. Sanele, good afternoon to you and welcome to the program. We understand your expertise in this country's financial landscape always bring these numbers to life, and we'll also understand that in our next segment. But Let's have this conversation, a conversation that isn't just, about growth. It's about the shifts and the investments that are making this growth possible. Let us explore what this means for Eswatini's future. And I suppose my first question to you is, when we look at these growth projections, it's not just the numbers that stand out, but the momentum itself. What do you see as the true driving force behind this projected growth surge?
Thank you, Mr. Ngwale. Thank you for having me. Good afternoon. So when we are looking at these numbers, what this show is, Eswatini is prepared to alter its economic landscape and, move into a new territory. And what we're seeing, which the minister, I think, highlighted quite a lot in his report, is the fact that we're moving towards greener energy. So energy sufficiency is actually critical in making sure that we can grow all other industries and lower the costs of production. So what we are seeing is that push in that direction. And what we comment on that effort is the fact that the government of the Kingdom of Eswatini tries to ensure that, you do offer support to small and medium enterprises and, across the spectrum and across the value chain. So one of the interesting things that I actually liked about the minister's report is the fact that he is speaking value chains rather than supply chains, and that actually is going to board into issues of citizens empowerment, where we try and, place the Maswati within the production chain, not just as labor, but also as, a component of the production function, such that by the time we get a final product going out to the market, all the Maswati are benefiting from that.
It's quite interesting. You're mentioning the issue of value chain creations, which has been a recurring conversation in Eswatini, something that we have been underlooking for so many years. Happy to learn that it is something that is being taken into account now and in a very significant manner. But one wants to also understand that this report places significant emphasis on industrialization, particularly in high-stakes sectors like energy. Now, how do you think this shift towards energy investment could reshape our economy, especially in terms of, job creation and attracting further investment?
So, when you speak of industrialization, I am 110% for, going into high value type of production. But at the same time, we need to be mindful of the short term and what we are dealing with as a country. So I would actually argue that we need an industrialization policy that would also be inward looking into the sectors that we've been having as a country and how we can grow them to a certain level so that they continue to sustain the jobs and create the jobs. Yes, moving into tech, that is quite commendable because that's where the money is, that's where the value is. But let us not forget that we still have quite a number of people that may not necessarily find their way into that high tech sector because it tends to be highly specialized. Notwithstanding, though, you do find that even if you go into energy, we've seen quite a number of programs where if you do your value chain analysis properly and you do your value chain process clearly, you can actually infuse and have quite a number of new industries coming into play in terms of the services, servicing the solar panels or whatever, in terms of installation, in terms of quite a number of things. So that could actually bode well into our into our skilled personnel that we have, the electricians, the mechanical engineers, and quite a number of people. So it is actually opening up quite a lot of scope, even to local entrepreneurs. And over and above, once you have a country that is energy sufficient, then you are able to attract new investments because energy is one of the critical things that investors look into. You don't want to come into a country where you are not going to have a stable supply of energy because that tends to affect the entire production process.
Yeah, I do see that we have 2 minutes left for this particular interview, but I also do want us to chime into, what this projection also suggests, and its resilience. And it's quite interesting because it's in a climate where economies globally are facing strain. How is Eswatini building up this resilience, and what lessons might we be taking from these investments?
So one of the things that we've been saying about the country ever since COVID, we've been positing very good results. So what this means for me, when I analyze it, it's more on the policy shift. The policy shifts that we saw from the previous administration to the current administration, where government actually right now, instead of being fully into what we would call state capitalism, but government does set the agenda and does actually align the skills that it is looking at. And also, if you look at the review of the investor policy and investor roadmap, that again shows that government is quite ready to work and attract more foreign direct investment by just repackaging how we were looking into these incentives and also bringing in the locals into the story. So what we are seeing there is that deliberate effort to want to do something differently, and changing from what we're doing in the past, and that tends to shift and move markets. And when you look into also the fiscal prudence, we are a country right now that seems to be at least trying its level best to deal with its bottlenecks, that we've always known and we've always seen, to try and get the private sector to grow. And when there's that new scope for growth, and then you couple that with the multilateral and regional cooperation agreements, so it does show that if you are within Eswatini, you can actually supply the entire Africa through the African Continental Free Trade Area, through your COMESA, your SADC, your SACO. So we are a destination that could be made a destination of choice. What we need to do is continue doing something differently so that we do grow the economy above the 2% mark. I think that in itself is quite an outstanding achievement. We've not seen this level of growth in over almost 3 decades now.
Yeah, looking forward to exciting times ahead when we speak about job creation and resilience, business resilience, something that, the country needs now more than ever. Sanele, thank you for your time. You're not leaving us. You'll be back with us after this break for our market analysis.
sabadali ukuthi njengalokhu sivile sive sithi khulumeni.
It is exactly 21 minutes, going for 22 minutes after 2. Sanele Sibia hasn't left the program today as we welcome to the market analysis segment where we are seeing that, charting the latest movements across global and local markets. We're seeing Wall Street's deep to Asia's rally and commodities showing signs of stability. Plenty to dissect here, Sanele. But as you join me, I want us to maybe navigate through the implications of these shifts, diving into how each region's performance impacts our economy, as well as what it means for our investors, our businesses, as well as the market watchers watching us today. A drop which is pretty significant across the major U.S. indices. Dow Jones down, Nasdaq down, and the S&P 500 down as well. What are the underlying factors here?
So what we are looking into there, Mr. Nxumalo, is, the election euphoria is actually set in, and what we're seeing is very cautious markets, but the fundamentals in terms of performance of the markets, in terms of the earnings, those ones seem to be on par with the normal. It's just this over-cautiousness around the election, which is at this point, when you look at the polls, it's really difficult to try and predict. So for traders, they're also taking that into consideration, what a Trump presidency would mean and what a Harris presidency would mean. But then again, when you look into the futures markets right now, before opening bells in New York, you get the picture that the futures market is also on an uptick, which means, the election is there, but until and unless we get a clearer picture, then we are going to start seeing markets react to that once we get the winner. And then also there is the issue of the Federal Reserve meeting that's coming up this week to really just come out and state what the monetary policy state will be in the US and over and above. While after that, we are seeing that with that decision, there is quite a lot of movements and shift towards bonds, and that treasury yield has actually been on an uptick for quite a while, ever since this uncertainty around the election started coming into the market. As we drew closer to this day, we were seeing all of those happening, Mr. Nxumalo.
Yeah, perhaps as America sneezes right now, the whole world hasn't necessarily yet, caught a cough, because what we're seeing in Europe is a mild upward trend. FTSE up, DAX up, CAC 40 up. I don't understand, Sanle, what does this modest growth in the European market signal about investor confidence? And could this provide stability or opportunity for Eswatini's trade with European partners?
So what we're seeing in the greater Euro region, and actually across Asia and into South Africa, that's relatively the calm before the storm, Mr. Nxumalo, because of that time difference. By the time Americans are done voting, those markets will long have been closed. So it's just kind of the cautious mood in those markets which we are seeing. And if you look at the numbers, you will see that they are just on an uptick, but still on the very same level that they've been in this entire week and the past week. That shows the amount of volatility that is there in the markets. And what we're looking into is the investors are actually coming into the market, but are being extremely cautious. So they're actually positing this bearish stance. And then when you look into London, you will see that what's happening in London is, the budget was tabled just last week, and the markets, they are still trying to look into that. But we also see the impact of a weaker dollar coming into play within the European markets. That's what's also causing the markets to actually, in a way, shift up, because the dollar relatively is weakening against the prospects of a Trump candidacy. So there are those issues there.
Interesting indeed. Strong gains in Asia as well. Nikkei up, Hang Seng up, and the Shanghai Composite is up by 2.32%. What are the factors here that are driving this optimism in Asia, and how might these movements again impact Eswatini's trade and investment in the relationships in the region?
Thank you, Mr. Ngumalo. So what we are seeing there, Mr. Ngumalo, is again, the time difference is coming into play, in the sense that, when you look into the Orientals, they are almost a day ahead of the US. So to see the impact of the elections, I think in tomorrow's trading session, while counting is ongoing in the US, then we are going to start to see how the Asian markets are going to respond to that. And we know for a fact that should we see Donald Trump coming into the play, or coming into the lead, then we expect markets to take a dip, more especially within the Asian region, because he always has, he always brings about this trade war with China and also with Europe. But today, the Asian markets are actually on an upbeat because of another stimulus package that China has actually rolled out, and we're seeing Japan also benefiting off of the benefits of an improving overall tech sector in the US, and that's actually reverberated across the markets. So when we have a new Trump president and we have those new tariffs, we might actually be in a position as Africa and as developing as emerging markets to try and really, see if China can get some of their production out of the mainland into countries that are going to be relatively easy to accept by the US, into countries that are going to be relatively easier to exercise those rules of origin. So we might be looking into those shifts in the next coming days, but once the elections that we might see in Europe, depending on the outcome of the election. And then in South Africa, what we are seeing there is, again, just another positive upbeat. And what we're looking at there is, the Purchasing Managers Index that is actually showing that orders for South African firms are improving, and you're looking into issues of the costs going down, purely because if you think around it, the dollar rand exchange rate has been improving, so that lowers the cost of imports. We've seen inflation come down, interest rates have come down, and there hasn't been any load shedding ever since we had this government of national unity. Again, costs have been on a decline, and we're seeing positive news coming out of China, so that also is spurring up the South African markets. Domestically, we still haven't seen any change today. And then moving into commodities. The commodities are also benefiting of the elections uncertainty, with gold sitting around 2,700. And Brent crude oil has also just taken a bit of a hike because of those positive news coming out of China, and still that rhetoric, from Iran, but relatively still within those regions. But gold is also taking a hint into what would happen if we have a Trump. Oil is taking that hint what would happen if we have a Trump presidency, who might actually go and say, no, let's release more of the reserves that we have in the US. So we're going to see all those play out in the following days. And then in terms of the currencies, because of the elections uncertainty, we're seeing the domestic currency getting a bit of strength because of all that uncertainty and that shift towards bonds in the US. So that is actually affecting quite a number of markets. We are back in the 17.45 region, back in the 19.01 region against the euro. And we're also seeing some upward tick in terms of the Japanese yen. Thank you, Mr. Nguyen.
Sanile, thank you so much for your time. Suppose the biggest worry is, the fluctuations that what is happening with the commodities might impact particularly our energy sector. But let's see as the days go by. We don't have time. Maybe we'll chime into that tomorrow. Thank you so much for your time, and thank you to our viewers for staying with us. Bye-bye.
The Vice President also toured other Pennsylvania cities, canvassing the substantial Puerto Rican community in Allentown and door-knocking in Reading. After starting the day in North Carolina, Donald Trump also held a rally in Pennsylvania, where he warned he would impose tariffs on Mexican imports if the country didn't stop the flow of fentanyl into the U.S. The Republican held his final event in Grand Rapids in Michigan, another battleground state, where he also concluded his campaigns in 2016 and 2020.
This is my last rally. Can you believe it? The rallies, these big, beautiful rallies, there's never been anything like it. And there never will be anything like it. And it just happened. It caught on.
Polls suggest that it's a historically close race. The victor may not be known for days after the vote. Trump has already indicated that he will try to fight any defeat, as he did 4 years ago.
Now, this election is set to be decided by a handful of key battleground states. That's because the presidency isn't secured by who secures the most votes, but rather who wins the Electoral College.
The U.S. presidential election is a nationwide vote, but each time the race comes down to a handful of states that truly decide the winner, known as swing states or battleground states. Why is this? It's all thanks to a unique process called the Electoral College. Here's how it works. The U.S. is made up of 50 states, and each holds its own contest for president.